And yes, it is so awesome having Tony Locantro joining us today. So since 1998, Tony has been advising in junior resource stocks with Alto Capital in Perth. And during this time, he's been involved in a number of IPO of juniors and raised capital throughout for a number of juniors that have since gone on to becoming mid-tier and major resource houses. Some of these have included IGO, Northern Star, and he was an early stage investor with his clients in Ramilius Resources. So with his more than 25 years of experience, I cannot wait to get his insights from him today with Where Speculators Show Us the Money. So it's going to be an awesome session. Please use the chat. We'll open up the floor at the end. And yes, thank you so much, Tony, for joining. It's awesome having you.
Yeah, great to be here. And it was great to meet you at the conference, Jess.
That's awesome.
All right. So I'm at the other side, guys. So my aim is to make my clients money. The last couple of years have been, to put it mildly, absolutely shithouse. It's honest, 25 years, the worst 2 years of my career, and that's mainly due to junior gold stocks, junior base metal stocks, just underperforming, obviously, lithium and rare earths. You go get a rare earth or lithium project in Canada and away you go. That's a disclaimer. This is not to be taken as any advice whatsoever. If you're looking to look into any of the companies I mentioned, consult your advisor, consult your wife or whoever. So basically that covers my backside. So obviously you saw me. That was as I was transitioning into a broker. 2001, actually, I wrote my first book titled The Green Room. It was a textbook on speculation. So what I used to do when I was in the police on night shift, I'd have another police officer go through the financial review and test me on share prices. And what I did, I managed to spot a change of behavior in companies. Fortunately, I was stationed in the city. So I used to patrol the stock exchange because there was lots of brawls there. And those are the days where every share price flashed up on the screen. So blink and you probably had to wait half an hour for the next company to come up. But I've always been a backer of the underdogs. So I don't know how many people are aware of Terry Hills. I grew up in Terry Hills and I was a mad Western Suburbs Magpies supporter before I transitioned to Parramatta. So my mum used to take me to Warriewood, get me a best and less Parramatta Sloppy Joe, and I'd go to school at Terry Hills and get booed. So my mind has always been contrarian. That does not help me in footy tipping competitions because I try and spot changes in form and it just doesn't pay off. But I like backing the underdog, and I just think if you're in speculative stocks, that's where you make the real money, even though now we've just been sandpapered to death. So last night, instead of hitting the piss at the gold conference, I recorded a live show. That's on DFA Live. You can get that on YouTube. That went for, I think it was on for about an hour. So I commentate on the economy, retail spending, property, psychology. I did mention a few stocks. So that pretty much I wing that session. I do that probably once every 4 to 6 weeks. I got put on Foxtel. So I used to do Sky Business, which was a live panel show. I'd fly to Sydney every 3 or 4 weeks, do a live show, then fly home the next day. You can see me on a lot of Twitter. I'm quite prolific on Twitter. I put up share stuff. I put up stuff on the carnivore diet. Do your own research on that. I suggest movies, Netflix series. If anyone hasn't seen Mr. In Between on Binge, just watch it. It's the best series I've ever seen. It's better than Better Call Saul or Breaking Bad. I mean, maybe we need to teach our kids to cook meth in schools, but yeah, Mr. In Between, check it out. So that's what I do. Last night's show I thought was one of my best, so you can check me out on that. And that's me the last couple of years. It's just been a horrible market. And I've come out of a lot of small cap stocks. Basically, the dot-com bubble was the Asian crisis set up the shells for the .com stocks, and that was one of the craziest bubbles I've ever seen. And we had a lot of mining companies that gave up, even some of the best in the business, and they went .com, and then it was pretty lean after that. But this is easily the worst 2 years of my career, and I'm just wondering when it's going to end. And that's a bright bear, but this is the amazing technology of AI, and one of my clients created that, and that's just how the market's been. It's really been depressing, and I know there's been some great geology done, there's been some good drill hits, but unless you're lithium in James Bay, no one gives a toss. And that's been really hard, because I like to support real companies, I like to support the underdog, and it just hasn't paid off. So, and that's the way I see the market at the moment. Pretty much there's just far too many attractive opportunities. The key for us as speculators is to pick which one can hold a conversation and won't take 80% of your money. So, and the funny thing is that slide also represents the top of the market, and that could be, houses in outer Western Sydney. Everyone looks attractive. You all want to live near a meth lab. So that's crazy. So I use that slide quite a bit. I used to use the Robert Palmer slides, but no, I've quit that. And just to show I'm not discriminating, if you're attracted to money, there's a lot of money on the left-hand side. And for the ladies on the call, there's some strippers. But that's the way I look at it. It's all about psychology. It's all about how we're attracted to opportunities, both at the bottom and the top of the market. And so probably here is my greatest percentage win. I backed Northern Star pretty much from the start. I actually wrote a terrible research report for clients when they were 6.3 cents. And I remember, actually, I was in Dublin. When I had money, I was following Pearl Jam around Europe, and I got the call that Intrepid, that sold Paulson's to Northern Star, wanted $40 million instead of $27 million. Bill ended up paying it, but the share price got down to 4.7 cents. So I just thought, this guy has got some talent. He knows underground mining, and I think the rest is history. And I had a client who bought a lot of stock around 5 cents, and I looked at his last sales, and as you can see, he's selling in little amounts, but the top there was, I think, $13.54. And I jokingly say to him and clients, the only way you can hold from 5 cents to $13.54 is if you're in a coma or in a prison with no Wi-Fi. And the other great achievement, I'm proud of IPOing Independence Group. I helped Chris Bonwick do the prospectus. I helped him out. I put in my own seed capital, which I sold way too early. But yes, a lot of that has come good. And from a speculator's perspective, if a company can't find it, you need to back the quality people that can buy an asset. And Chris went to a barbecue. Western Mining was selling the Long Nickel mine for $15 million. I think it's probably paid $300 million in tax. But these pale into comparison to this lovely stock, Ramilius. So Joe Holdsworth used to come and see me. Joe, an old prospector, and what I did, I threw everything at this stock. And we bought probably about a quarter of the company for mums and dads. I don't deal with institutions. I don't seem to attract them. But when I got back from Europe, they came out with 48 meters at 154 grams per ton gold. And that was just amazing. My hands were shaking. And what happened is the stock went 50 times. And they actually paid us a dividend. I didn't know what a dividend was. They paid capital returns as well. And the thing about Ramilius was that eventually the mine became depleted, and the stock got down to about 4.7 cents, and at 50 bagged again. So as underdogs, we backed the underdog. I remember one day Joe came up to me and said, "Oh, look, Tony, I need a new kitchen. Should I sell some stock?" I mean, that's how humble this company was. And now Mark Zentner's doing an exemplary job in pretty much trying to take over everyone. So on a satisfaction basis, Ramilius is my greatest win so far, but that was 2007. I backed Chris Cairns. I don't know if many of you know Chris Cairns. He was Integra Mining. Integra Mining made 2 gold discoveries. GFC lost all that upside, then got taken out by Silver Lake. So now that we've got a lot of assets a toast, I think speculation in property, crypto, all that, those lesser assets is over. And I've got one shot. So I'm gonna make a call here. I wish I bought a lot of houses at North Curl, but I didn't. So I'm backing silver. And I think the upside case for silver is quite good. You've got solar panels, you've got antibacterial. The gold silver ratio is way out of whack. And I think that silver could be far more easily manipulated than any other commodity out there. So that's what silver did. It had that massive spike in 1980. And that's when Nelson Bunker Hunt tried to corner the silver market, and he was rug pulled. But, that was quite interesting because before my father died, he actually was on his deathbed, and he told me the story that Nelson used to go to our farm in New Zealand, and because it was right into horses, and basically the US government sent him broke. And I think there was documented that he had to sell 546 horses to survive. But that's what I think, at some point we had that big run in 2011. But I think you've got to really, as what I do for clients, we're making the call, and my call's silver. Could be uranium. I don't know if many of you were around for the uranium bubble in 2005, 2006. But we saw some pretty crazy shit then. Palladium went under a cent. I think it peaked at about $10.82. But with every bubble, you get a handful of successful companies, but the rest of it is just lifestyle. So there's a 5-year silver price. Silver's pretty much done bugger all. It's up around 37, 38 in Australian dollars. I look at the Perth Mint. You can buy coins, but you're paying, from the Perth Mint, you're paying $43, $44 per coin. Now, I'm going to make some big calls. I think one of the best value resource stocks on the market is Red Metal. Now, there's the short-term chart. They've had a bit of a spike. That was due to them finding a unique rare earth, potentially a rare earth deposit in Queensland that can be treated with weak acid in granites. And I don't think speculators understand that. I bumped into Rob Rutherford today at the gold conference, and he was saying, well, we've just got to do some metallurgy, but this could be quite prospective. And I believe the Queensland government at some point is going to throw a shit ton of money at critical minerals, critical metals. So this is what I look for. This is probably my main requirement, is management. Rob has run Red Metal for 20 years. And they've still got under 250 million shares on issue. And as you can see from that chart, junior resource explorers are cyclical. So you can either collect all the stock or you can trade it. They had some massive spikes there. The last time we really got badly sandpapered to death was 2015, 2016. But as you can see, a lot of the GFC, it was a V-shaped recovery, etc. So this is probably now stepped right up because of Rob's management, this rare earth surprise. And interestingly, you had Andrew on from Maronan recently. This is another stock I've fallen in love with. And so they have a big emerging silver lead resource in Queensland. It's near Cloncurry. They're reporting consistent lead silver results. They've got a bit of copper gold in the middle. And I just think that this company has a 4 million ounce gold equivalent resource, and you can buy it for $33 million. So that's cheap. Silver wise, 288 million ounces of silver equivalent. It does have some copper gold as well. and Red Metal own 50% of Maronan Metals. So I think these are the two stocks, two underdogs I'm now totally focused on. And I thought Andrew gave a great performance here on the geology of the Maronan deposit. And I just think that this is the type of quality I look for. And I go back to 2001. There was this prospect called Uranus, and Minotaur Gold had it. And Burmine and other companies had drilled close to it. And then Minotaur Gold drilled into it, and they found Prominent Hill. And obviously, when you have a project called Uranus, you have to change the name. But that became Prominent Hill. So that's what I'm looking for in exploration. And my relationship with Minotaur has been longer than both my failed marriages. So, it is a bit of a relationship game, guys. So Maronan and Red Metal, I must disclose that we're as full as a state school in both of those stocks. Clients, we hold about 15% of Maronan, and we've bought probably 10% of Red Metal over many years. So that's what I look for. These stocks aren't overly popular on chat forums, so it's still undiscovered. So anyway, that's what I've been working on. And this is a slide I often use. When asset classes are going well, people are making money, you're sitting by the campfire, you're singing Ed Sheeran songs, and then suddenly prices start to fall. And what I've learned in this industry is there's really no friends when it comes to money. Everyone's a long-term investor. Everyone's your friend. And when things turn around, the crowd starts to riot. So if you look at that campfire as the constant, these are good people in the mining industry that haven't jumped on a bandwagon, and now shareholders are pretty much revolting. So anyway, that's what I've been doing. Some of my experience, and that'll be all, folks. That's my little slideshow.
Oh, yeah, thanks, Tony. When do you think this will turn around? You say this is the worst for 20 odd years. Do you see daylight at the end of this, or what?
Oh, well, that's a great question, because when you're in a bear market such as this, you fail to see the upside. And my clients are now in a chronic low price environment. So some of these gold companies I support are $10 an ounce in the ground, and the average is normally 50 plus. So how can I explain it? Why these stocks have taken another level down is because the believers in these companies are fully invested. They couldn't raise a sweat, and the companies have had to go to brokers where the clients do not hold. So that's resulted in the next leg down. I can see that now it's so cheap. A lot of these stocks, as I said, the EVs are ridiculously cheap. And lithium and rare earths have had another crack. And we've had a heap of juniors go to James Bay, Canada, and they've pegmatites. They're everywhere. But now they're starting to wane. And I'm thinking, well, where's the money going to go? Look at all the attention. Crypto got all the dopamine. Kids were punting all that rubbish. I just think now you look at Ramilius and Westgold, maybe they'll start to come in and make some takeovers, but these quality will come to the fore. So I think we're not far off the bottom now. Mind you, if we get, Wall Street's artificially being held up by a handful of stocks. So I just think now a lot of my clients don't see any upside. I had one of my biggest punters ring up and said, I'm done. To me, that's pretty close to the bottom. So I think we'll probably start to turn around shortly. And you look at it, Mark Bennett from Sirius was down to his last 50 grand. And then they drilled into Nova Bollinger. And that set the junior resource sector alight. And that's in 2012 when the market was shit. The market was shit in 2001 when Prominent Hill was discovered, or DeGrussa. So I think that the hard part is because everyone that believes in these companies is fully invested, and they're looking at these opportunities, and we've got vultures coming in and buying them all up. So anyway,
okay.
Yeah.
We're just not seeing many IPOs anymore, either, compared to a few years back.
Oh, you can't get them away.
You can't raise the money.
And a lot of them the ASX has cracked down on cash boxes. Before you could put a couple of dodgy projects and raise 3 mil and have a cash box. No, you've got to pass the asset test now. And I think IPOs and spin outs, a lot of juniors would spin out projects. Now there's just no interest. And I think once we've seen a few lithium companies sadly fail, which they are, I mean, I wish these lithium companies, people could sell them and then move to our sector. But it's like you're playing a poker machine at the Rudy Hill RSL. You keep waiting for the jackpot that never comes. So look, I've had probably my worst 3 months in 25 years. I think now it's time to turn around. It just can't get any worse. Otherwise, I'll be driving Uber at night.
Yeah, you said you were a great supporter of underdogs.
Yeah.
How do you pick the difference between a real dog and an underdog?
Oh, that's a good question. When I came into the broking industry, obviously I was naive, and I got to see the bad side of the industry, the prostitutes and cocaine side of the industry. I chose to go the slower way. I've found that juniors produce quarterly reports, and I have a few benchmarks on those quarterly reports. I meet the people face to face, and I can tell who's in it for a lifestyle, who jumps on a bandwagon, etc. So I look at Red Metal, their quarterly reports. I mentioned Encounter as well. Will Robinson, Encounter Resources. I mean, they 5-bagged in the Arunta. We've had the old Minotaur, Independence. Look what Northern Star's done. But a lot of the time, the best people come out of major mining companies. And what I found from my experience, John, is that sometimes some of the best IPOs in this sector drop to 10 to 12 cents because they don't pay promoters. And if you've got the balls and the money to drill deep holes, but I made a lot of mistakes in the .com bubble. Sometimes you back the wrong people. But if you take a portfolio approach and buy the right ones, you're going to have a discovery sooner or later. But yeah, it's tough, but it's taken me 25 years to read the body language, and I just have got an insatiable appetite for quarterly reports. And fortunately, on my client list, I've got some good geologists. So yeah, and at this conference, I saw 3 standouts, and I'm going to give a smoky. So my standouts were Saturn Metals, code is STN. They have a massive heap leach project at Apollo Hill, which they're going to look to get into production. The other highlight standout was Morona Metals, code is MMA. And the other company is a company called Spartan, SPR, which was previously Gascoigne. Now, Gascoigne knocked on heaven's door. Now they've made a beautiful high-grade discovery. They've got the plant. The stock, unfortunately, almost tripled in about a couple of months. SPR, so those 3. And I was chairing the session recently, and a guy got up from Talk Metals, a Colombian guy, Christian Marino. And I've never seen a more confident presenter since Bill Beeman. And they've got the Paris Goldfield in WA. So they're the 4 that I'd seriously look at from this conference. And, I went to conference in Noosa. I found Gold Road at 5 cents. You just go to the conferences and you find the gems. And what I've been fortunate to do is host some of these conferences or speak at them, and then I get to eyeball people. So, look, it takes years to pick it up, but those that come into this investing game and get involved in cults, you become addicted to rubbish. So anyway, I just thought I'd mention those 4. So yeah, do your own research.
So how big a part of that discrimination is based on eyeballing management?
A huge amount of it. And what I'll do when I find a new idea, I'll start buying it, and then I'll make a call to management, and then if we've got enough liquidity through my clients, we'll go in and I'll try and get everyone set. So, but then I look into the backgrounds. But there are times, John, where I call them the colourful people that will jump on a bandwagon, that do promote. And if you can buy around the same price therein, you can make money. But I don't do that very often, because that's like being on a diet, then having a donut day.
Speaking of the lifestyle explorers, how do we get rid of them?
Well, I just think when fads end, they'll go back to becoming a shell, and it happens every bubble. So they'll raise some money, everyone will cut costs, and then you'll have a heap of companies trading at $1 to $2, $3 million market caps that are ready pretty much for the next bandwagon. And that could be, if it's silver, we go from 10 silver companies to 400. I was involved in the lithium bubble 2008, where you had Orocobre or Galaxy. Now everyone's got lithium. Even, I don't know why, now it's like showing up to a piss up at 3 a.m. holding a vegan pizza. No one's going to want it. So I think that with ASX will tighten listing regulations. They will have asset tests, and these companies will just become zombies, and then they'll have their supporters. So I think it's hard, because we've had a period where IPOs are near impossible to get away. So I think they'll always be around, and this culture of sucking in retail investors, I mean, it's been alive since the 1600s. Only the fashion and drugs of choice have changed.
Do you lower your commission on a raise when you believe in the story?
That's a good question. A lot of the time is now I can't drive the bus myself, so I have to team up. So when we raise money for a company, I'll openly disclose that the fee's between 5% and 6%. I get half of that, and then I have to pay my firm 30% of that. So the fees aren't huge. With a lot of these corporate raisings, we will get some broker options, and normally broker options go to option heaven, and they're hanging out with all my lost socks and underwear. So it's tough to get these deals. I'd love to go to a mining company. I'd love to go to, and some of my favorite ones, and say, look, I've got $2 million for you, but if I start halving my commission, then I'm not doing myself any favors. So I think sometimes for someone to stump up that sort of money that's prepared to stick with a company and support it, I think we earn every cent of that, because now a lot of these juniors have had to go out wide to distribution networks, and all that happens is the share price gets absolutely smashed when the stock's issued. So I think where everyone's struggling at the moment, mainly advisors more so than company directors, who continue to pay themselves $250 to $500 a year. So they've got a steady income, and we're forced to look for second jobs. So, without us raising the money, I helped raise $4 million for Independence Group, and now look at them. So it's got to start somewhere. But what I will say, Jess, is that in this industry, there's not a lot of loyalty at all. And I try and be loyal. And if a company's overpriced, I sell it. And one of the biggest mistakes I've made as an advisor is being too loyal and not selling when I should have.
Yeah, I've got another one. Do you do pre-IPO stuff, or do you focus entirely on listed companies?
I've done some. I do seed capital as well. That's open to people with professional investor certificates, 708. I did seed Independence Group, so that is a much higher risk, but we do look at seed opportunities. But at the moment, with the lack of IPOs, they are quite difficult. There's a number of even biotech companies that I'd like to put seed capital in, but my clients are pretty much pissed off with me, or they're fully invested. So that market has dried up. It really has dried up. And it's all about rotation of capital. If we get a big discovery, we'll start moving around some capital, because as you know, when a discovery is made, these stocks always overshoot to the upside. But yeah, look, I'm open to see deals, but at the moment, it'd be embarrassing to put up my hand for $5,000 worth of stock, because this is the most difficult period of my career to raise money when I know these explorers need it the most.
Hey, Tony, is there much difference between, listed company and trying to raise capital and keep the stock market going on the up and so on, compared to a private company looking for an investor?
I think at the moment that the attitude is that people want something that they can liquidate, and right. I think liquidity is key, because what social media and endless scrolling has done, everyone wants a dopamine hit, and it's like how people think of the exit before they get involved. And I'm often approached by people that want to buy resources, and that's just all a load of crap. And I think that there's a lot of distrust at the moment. People can put out an information memorandum, and we're not going anywhere. How the hell do you get out of your stock? And those with a good fundamentals really want to list, because for some companies that's their exit, is to list and get the multiples rather than stay private. But at the moment, private companies shouldn't list about now. Now's not the time to list. And if you can go through some funding rounds, I did see a talk from Hedley Widder, which is worth chasing up. And Hedley was talking about a stock that's going to list eventually, and Line Selection have taken a big stake in it. And I'm thinking, well, if Hedley Widder, one of the best in the business, is keen, then I should be keen. So I'm going to investigate that in due course. And that company is called, believe it or not, Plutonic. So that's going to be worth a look.
Plutonic, yeah. Chris Patera, yeah, I think he's involved with that. Yeah.
So I'm obviously, Hedley's hopefully still around. I actually missed his talk to come and do this, but that's fine. But he, that they've got $70 million in cash, and they're trading at 2/3 of NTA. And he's a smart guy. And I watched his presentation. I'm thinking,
yeah, what's NTA? What's NTA?
Of Line Selection. So that's their assets with their cash, and their net tangible assets about 63
net tangible asset.
Yeah, and they're trading at 44. And he said he's in Alto Metals, he's in Great Boulder, and I think for a conservative investor in junior resources, you could do far worse than pick up some LSX. But I'm going to take a serious look at Plutonic, that's for sure, because if he's there's got to be a bloody good reason.
Another one's just come through. Are you looking for just growth stocks, or do you look for a strong dividend yield as well?
I don't focus on dividends. I am buying probably one of the most illiquid stocks on the ASX. It's called Mayfield Group Services. Code is MYG. The top 20 own about 90% of this one, and they're about 42 cents. They're paid 1.7 cents in dividends. They service renewable energy. They service phone towers. So it's one of those recession-proof businesses that's growing. And to me, that if you buy them around 42 cents, once their cash flows accelerate and these dividends continue, then every small cap industrial fund's going to want to jump on it. And that's when you get the big re-rate. So I've just had clients, I say, well, look, you made money on specs, let's park something here. And sometimes the best stocks are right in front of you. I was using Premium Software, that 10 bag. Iris is another one. Computershare, most of us will use. So I think that now I will go and look at small industrials for growth. I will look at mining companies for growth as well. So I'm not drawn between any sector. The biotechs been brutal. That's been an absolute shit show, the biotech sector. So, but who now with these companies producing, West Africa Resources, WAF, was 5 cents forever. Now they're one of the best gold producers on the market, and they're still undervalued. And I look at, so are these companies going to grow, or are the likes of Ramelius, Westgold, or even Jake from Evolution just going to come in and gobble them up? But I still think growth-wise, a lot of these good companies that will eventually pay dividends, they're going to get taken out because the valuations are just stupid cheap at the moment.
Oh, well, this has been awesome. So thank you so
Thanks,
much for your time. It's been really insightful. I've learned heaps. So I can't thank you enough for chatting to us today. It's been really cool.